I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today's episode is about escrow accounts, mortgage escrow accounts. The reason why we're doing this is to talk about them in the context of our borrowers. There's a lot of our borrowers that make a really big deal about escrow accounts.
Escrow waiver. We get borrowers calling up. You know what, Tom? You know what, Ed? We need a waiver. We need an escrow waiver right away.
Do they ask us for waivers?
Or they just say, and we pay our own insurance and taxes. They really don't say waiver. They really don't say escrow. But boy, you know an escrow waiver borrower when you talk to one, because they make it very clear early on. So we thought, let's talk about the escrow waiver borrower, the person that wants an escrow waiver.
So an escrow waiver is when the bank does not pay your taxes and homeowners insurance. What you're doing is 95% of loans, the bank has an escrow account. When you make your mortgage payment, the bank is collecting from you the principal and interest of the loan, but also the taxes and homeowners insurance, the prorated, the monthly, and that's all in your monthly payment.
Right. They're actually collecting it for you, for your benefit. We spend a lot of time telling people that escrow accounts are not costs. They are a cash item at closing, but they're not a cost. And I actually looked up the definition of an escrow. I thought that this would be interesting. It is a legal arrangement in which a third party temporarily holds a sum of money or property until a particular condition has been met. So in this case, there really is no condition, but it's an arrangement in which the bank is holding the borrower's money to pay for the borrower's benefit, both insurance and taxes. And actually, there are there's quasi waivers, which is sometimes the insurance is paid by the borrower, but not the taxes. And we don't need to get into that.
A hybrid, but yeah.
Yeah, kind of a hybrid.
So let's talk about why do banks encourage borrowers to have an escrow account?
Yeah, why do they care?
Yeah, in fact, so a lot of banks actually charge a borrower a little bit of, it's a little bit of money. It depends on the loan amount size, but they'll charge you extra on your closing costs if you do not want to have an escrow account. So why are they encouraging borrowers to have an escrow account?
So I would say first off, it's very important that borrowers know this. Banks do not make money. They do not charge a fee. I guess I should say that. They do not charge a fee to escrow the money for you. It's not like they're putting it in their account, taking people out to dinner, and having some slush fund. Really, there's one reason why they do that, Ed, right?
Well, okay, so right now, there's taxes, okay? So taxes and insurance. It's all about taxes and insurance. If your taxes, they want to have control. They want to make sure your taxes are paid. Why do they want to make sure your taxes are paid? Because if they're not, a tax lien will go on your property and it becomes a priority lien ahead of a mortgage, right? Those taxes will go right in front as far as position. Mortgage banks do not want to have some tax lien ahead of them on, that's recorded. Okay, so that's taxes. They want to make sure taxes are paid. And if they give you control of that and you just doze off for a couple months or forget to make that payment, that's a problem. Now, then there's homeowners insurance. If a homeowner forgets to make his mortgage payment, his homeowner's insurance payment, and all of a sudden his insurance lapses, what's going to happen? I mean, the coverage, the home, what if it burns? What if there's massive damage to the property? Now, and then the borrower just walks away and the bank is left with a home that the collateral of the loan cannot be repaired, cannot be fixed.
Yeah. With some of the fires that we had last summer, there were some paid off for homes, and when homes are paid off, there's no lender, so the lender doesn't require you to have insurance. But the borrowers decided to save some money and didn't have insurance on their homes. Well, when your house burns in a fire, there's literally no way to recoup that loss. There is no insurance policy. There is no plan. So in the case when a borrower forgets to pay, gets sick, goes to the hospital for an extended period of time, and the insurance does lapse. If anything were to happen to that home, that lender is holding a house that is now damaged that cannot be replaced.
That's right. They don't want to own your home. Anyway, they definitely love having that escrow account so they can make sure taxes are paid and homeowners insurance is paid.
Right. But that's why they want to do it, not for fees, but to protect the collateral in which is securing that loan that they just made you.
So let's talk about the pros and cons of an escrow. I think one of the things I was thinking about when I was preparing for this podcast is you do not have to, life happens so fast. We're so busy. Your taxes are due twice a year. Your homeowner's insurance is due once. Those deadlines can come and go and you totally forget. I mean, it's possible. You have to remember, put it on your calendar and remember to pay your taxes and insurance. Okay. Having an escrow account takes away that stress. Okay.
Well, don't you have it on your calendar like an anniversary day? Like where you are all excited and you make a cake and you pay your real estate taxes twice a year, or you pay your homeowner's insurance. Like, isn't that what people do? They throw parties when they do that? Yeah, no way. I mean, I have not paid a property tax or an insurance bill ever in my life. And I don't, personally, I don't know why anyone does. Everyone's, different strokes for different folks. And I know everyone has their own reasons, but I've never paid. I have no interest in ever paying. I have enough bills and enough, things to do in my life to where I literally can't add 3 more payments per year. So that's a huge, huge pro to me personally.
Yeah, right. And for me too. And I think that the second pro is also very important is, well, twice a year for taxes, you have to have that money sitting around and you're going to, twice a year, there's a big chunk going towards the county for property taxes and a big chunk for homeowners insurance once a year. Mm-hmm. What's nice is when you have a budget, monthly budget, it keeps your budget real stable. You just pay X amount every month and you don't have those big, oh, what happened that month? Oh, that was, $800 for taxes.
Yeah, and then the last time I checked, when the typical person gets a flat tire or has to buy new tires, which can be, about what half a year's real estate taxes are, that's tough. You got to look into the accounts and figure out, well, where's this money going to come from? So yeah, that can be difficult if you're not, budgeting it every month. That can catch some people at a surprise.
That's right. Okay, so I think those are the 2 big takeaways for pros. And now, what about the cons?
What's the big reason why people want to, not have an escrow account? That is my money. Yeah, so that is my money, and it's not due. It's not due on a monthly basis. It's due taxes twice a year and insurance once a year. I'm not paying anybody that money until the day and the time that it is due. Why would I give my money to a third party, to a lender, just so they can hold it and make interest on it? I'm gonna keep it in my account. I'm gonna make some interest on it, and then I'm gonna pay it the day before it's due.
So you were talking about that earlier, like the banks they're not creating escrow accounts to make fees. There's no fee to have it, but they do and can make a little bit of interest. But borrowers will talk, anyone who's really wants to have control over their taxes and their insurance, and those people who do not want to have an escrow account, they always bring up the fact that banks are making interest on their money. And it's true. It's a couple bucks, literally a couple bucks.
Yeah, literally a couple bucks. Didn't we do an analysis?
Yeah, I mean, it does add up. I mean, but it's so small, especially with interest rate savings today. If you're having your checking and savings account anyway.
Money market account. Yeah, what is your money market paying? So, and we literally did a little analysis and figured out that if we had kept that money and not paid it in an escrow, how long would it take for us earning interest in our little tiny money market account, to break even? And I think it was 11 to 13 years, long time. And that's not making, money market interest rate. That was making 5 to 7% interest, which if anyone can point that out to me, I'd jump on that right away.
Yeah. Now, again, so we're talking about the cons and we're already bringing in the pros. the counter arguments. But it's interesting how we are countering that. But yeah, it's the interest. The con is that the bank's going to be making a little bit of interest, and you're not going to be making $6 or $5 a year in interest. The other con is that taxes and homeowners insurance always adjust. I mean, once a year, you're going to have your tax assessors going to go and update your taxes. Your insurance company is going to update your insurance, and if those changes have increased or decreased, but they are usually increasing a little bit every year, your payments are likely going to change. Could be $10, could be 20, 30, 50. These escrow analysis adjustments are done once a year, and people do find it annoying that they have to change their payments, right? They have to, my mortgage payment is changing. If you don't have an escrow account, your payment is always just principal and interest, right? So they have to adjust. If they have auto pay, they have to go in and adjust their auto pay with their bank, and it can be annoying. But that is, I think, the another major reason is they just don't like having those adjustments, those surprises.
Yeah, right. And when you're used to making a monthly payment, at a certain amount every single time, getting that once a year notification saying your escrows, changed. And it's important that people know that it's not like the lender's making more money. They're not just raising the interest rate on you. No, it's because your insurance or your real estate tax premium went up. That would cause a potential once a year change in what your payment is. So yes, that will bother some people, though I will throw in a quick little pro. It's going to change anyway when you make your insurance payment. Okay, any other cons? Cons?
Oh boy. Let's just, as far as the interest, I think I said $5 a year. That's not accurate. I think if you just look at the interest is probably going to be more like $20 a year in interest.
Whoa, $20 a year.
Yeah.
So
at 1%, of 2,000.
At 1%. Okay. And now and again, it's very important to tell borrowers that lenders, some lenders will charge the borrower a little closing cost if the borrower wants escrows to be waived, right? Because the lender's risk goes up a tiny bit. If you win the lottery, if you get sick, if you don't make the insurance payment, something can happen. The lender's risk goes up, so he's got to charge a little closing cost.
Yeah, we have some banks that do not charge, but they're in the minority. There's very few banks that don't charge for that waiver.
Yeah. So again, some banks that do, some banks that don't. We do know both. So if you're just to look at that and say, okay, you're going to save $20 a year. Okay. The typical bank may end up, charging maybe between $200, $300, maybe $400 for that escrow waiver. So if you're saving $20 a year, you can kind of do the math. If it's $200 charging, it take you 10 years, to make that back. So that just kind of puts it into perspective. But sometimes life is not just about return on investment, though it's very important. Some people just want to have that control. They want to know what that is. And to tell you the truth, I don't even know what my insurance payment is a year. I have no clue. I just make it my mortgage payment. Taxes, tell you the truth, right now, I'd probably be off about $500 if I were to guess.
Yeah,
I don't know. I don't know.
That's pretty normal. Especially taxes. A lot of people don't know their taxes. And we get those assessor updates every year. And the homeowners insurance, I know what it was the last time I looked at my closing, or I looked at an insurance update, which was probably about a year ago. But, I haven't checked on it. But I think that really covers everything about the escrow accounts. Again, people make a really big deal about escrow accounts, not having them. And I hope that this has helped people kind of answer those questions and weigh whether or not they want an escrow account or not.
Yeah, and I guess I'll end it this way. So probably about 3% of our borrowers want escrow waivers, okay? Meaning they want to pay their own. Of those 3%, I bet you half of mine, after I describe and kind of break down what it means, end up saying, you know what, let's just forget it. Go ahead and put that into the mortgage. Thanks for explaining that, Tom. So if there's anyone that wants it to be explained and this podcast just didn't quite do it, feel free to call us. No problem. And again, it does not bother us either way, whether borrowers ask for waivers or not. We just want to do, what the borrowers want.
That's right. I hope everyone has enjoyed this, and be sure to like this episode, subscribe if you can, and again, just email or call us with any questions.
Perfect.
Hey guys, thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com, and be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917, and 1618695, Equal Housing Lender.